The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 21st terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, as Addie did a little while ago. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 182 points, 23,612 is the print. S&P up about 17. NASDAQ 100 up 65. That's a little over 1%. Semis are up 1 1/10%. That's 14 points. Russell up 11 points. You've got the transports up 0.75%. Gold is up 6. 12 is up 6. Silver is up 12 cents out there. Leading the charge, Priceline dollar-wise, $14. GW Pharma up 12. Google's up 12. Amazon is up 11. To the downside, Signet Jewelers down $22, 30%. That's taken a huge hit. Cracker Barrel down nearly $7 or 4%. AutoZone off 6. Intuit down 5. Chipotle down about $5 as well. Of course, I want to look at what you want to look at. I know what I'm going to get to Addie's question first, because I was supposed to cover that on Monday. Then we'll go take a look at the markets. And what she wanted to look at was Tesla. And if we take a look at Tesla, Addie, what we're looking at here is 3 different time frame charts. Now, I believe that you are long Tesla. We've got the daily chart on the left-hand side. Center panel is going to be weekly. Right-hand panel is going to be your monthly time frame chart. So here's the one thing that we know with regard to Tesla from the daily perspective, and just simply looking at those TAS daily profiles. When Tesla gapped down on this trading session right here, with volume, by the way, November 2nd, it was a close below the bottom of that daily profile. That was after seeing additional daily profiles close below the bottoms of those levels, which are identified as support areas. So this was already suggesting to you and I that Tesla was continuing to move lower. Now, let's take a look at what it actually did as it was gapping down. We had an A to B equals CD pattern. The A point was out here in the daily chart on September 18th. The B point out here on October 3rd. The C point was on October 18th. It made about a 1 to 1.272 A to B equals CD to the downside. Then you saw the bulls come in on that very next trading session. So you had a nice little bullish reversal candle on November 3rd. Now what we've seen take place out here is I like to go to the larger time frame chart. So the next larger time frame chart for you and I is going to be the weekly time frame. And price has now gotten back above the bottom of its weekly box. That price point is 311.83. Your preference, if you're in a long position inside of Tesla, I'm not suggesting you take a long position inside of Tesla, but if you're in it, you certainly would like to see price close above 311.83 out there. It did last week. It's tested this week. You'd like to see on Friday close above that. Why? Because then that says, okay, there may be more. That maybe it was a bottom. Maybe price is just simply going to retrace and get up into the 361.94 level. That's what the chart is telling us on the weekly time frame. If we see a close below the low of that trading session on the daily basis, which does have volume from November 2nd, that low is 292.63. Well, then you should anticipate that price is going to get to 283.50 and likely 220. Can you put me back in? I'm going to go with the high side. Just waiting. Make sure, because we got kicked off there. Yes, okay, we're good. Okay, we're back in business. I got to love those guys in the control room. They are on it. So what I was saying with regard to the markets, one of the reasons why we didn't really have to go pay attention to them off the bat is because each of you out there already anticipated and knew what the markets were going to do, right? We know about the bottom that formed in the markets last week on Wednesday. Nice buyable bottom. That's why we are 90% long our portfolio in the market. If we take a look at the signals out here and where we're at as we speak right now, 1:13 in the afternoon, well, this has got to repopulate too. There we go. So give me a second here just to click on a couple of tabs, see if we can get it back. That's the problem when you run into an internet glitch. But what I can share with you while these things are repopulating is that, look, you don't need me to tell you that buyers are the ones in control. All we were looking for when we take a look at the advanced decline oscillator readings was just that confirmation. That was kind of like the next step in the process, right? It's like building a house. It's like painting something. It's like whatever it is you're going to do out there. It's one step at a time. The first step in the markets to form a bottom were to complete a pattern. Well, last week, that pattern was the spot volatility index, one-day rate of change greater than 10%, and the difference between the 3-month and the 1-month out there. That was the signal that the markets had formed a bottom. The second signal was the minus 150 level inside the New York Stock Exchange. Right now, today, we are up at 58.04. This will be day number 2. This should be confirmation inside the New York Stock Exchange. Buyers have control of the market. Yeah, I know you can say, hey, the markets are up. Clearly, buyers are in control. No, we're looking for meaning beyond that. NASDAQ composite, it's all looking good. Hey, the VIX index, we said it was going to get down to that 950 level. Let's change it by 2 pennies, 948. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up about 180. So our first question comes in from Tim. Tim says, Steve, SIG, S-I-G, took a hit today. Do you see anything that might suggest an entry position? So let's go take a look at that for Tim. That is Signet Jewelers, and quite a hit. I haven't looked at the charts out here, so we're both going to do this together at the exact same time. Now, when we say took a hit, we're talking about with volume, gapping down to the downside. So let's just take a look at this daily time frame chart out here. And one of the things that we can see, a couple of things, right? So first of all, Tim, the last time that Signet Jewelers broke out was on the trading session of August 24th, 2017. It's a daily chart we're looking at. 12.46 million shares to the upside. Prices pulled back into the breakout area, but with 11.7 million shares as we speak right now. So do we see that as an entry point? No, I don't see that as an entry point out here. If it were coming back with light volume, well, then maybe. Now let's take a look at the other patterns that are out here. So we know that it's coming back into a breakout area with just way too much volume. What this actually has confirmed today is a Gartley sell pattern. Now you might say, how do you see that on here? Well, visually, because I've studied these patterns for so long, they just stand out. But let me show you technically what I mean. So every Gartley pattern, in this case here, Gartley sell pattern, is where you're looking for some type of entry point in a trend that you've missed. In this case here, we can see that trend. Let me get my arrow out. Let's get the old red arrow, if I can find it, red arrow. Here's the trend to the downside in Signet Jewelers, right? So let's say you saw this moving down, you were really bearish on this, and you were asking yourself, or you were asking H.M. Gartley, hey, H.M., where would I sell this thing? He'd say, well, you'd sell it at the A to B equals CD to the upside, the opposite side of that trend. So our A point inside of Signet Jewelers, nice little hammer candle down here on the trading session of May 31st. That's your A point. Your B point, for all intents and purposes, whatever that means, is June 29th, 2017. And your C point is down here on August 23rd. Now, what we can see is as price had made the 1-to-1 level, no bearish reversal signal. And he pulled back, just found support at the top of a TAS daily profile. Now, yesterday, unfortunately, in this case here, this went on to make the 1 to 1.272. Now, with regard to retracements on this, we'll show you the other side of that. Now, the retracement aspect, that was put together by Larry Pesavento, our one and only Larry Pesavento. HM did not have the retracement levels inside of his A to B is Gartley pattern, what we call Gartley pattern. He didn't even call it a Gartley pattern. We called it a Gartley pattern. But in this case here, you can see it was nearly about a 0.618 retracement, 80.31. We always use those as guidelines, not necessarily exactly. But how do you know when an A to B equals CD pattern, or any pattern for that matter, is done? It's very simple. The cavalry has to show up. Now, the unfortunate thing here, it's not worth the reward risk to jump on the short side. You'd like to see some type of bearish reversal signal. Well, you got it today. It just happens to be a humongous one. Now, every Gartley sell pattern has 5 different outcomes. If we take a look at what those outcomes are, let's get rid of the A to B equals CD. The first 4 are going to be, in essence, retracement levels. And so as retracement levels, we go from that hammer candle low from May 31st all the way up here to the high on November 17th. Well, you can see that the 0.382 retracement never even had a chance this morning. The 0.618 sliced right through that. You're at the 0.786 level with volume. What this really says to me, Tim, is that Signet Jewelers is going to go head down and test that hammer swing point. And that's at the low of 46.09, 4 million shares. If that gets taken out, well, then this becomes a humongo A to B equals CD to the downside. And Tim, as we pull this back out here, you can see that this thing has really been in a downtrend ever since the trading session of October 30th, 2015. I don't see any reason whatsoever for you to actually be looking for a buy in Signet Jewelers. So I hope that that helps you out, at least not as we speak right now. This thing could really have a huge move to the downside. All righty. I don't see any other questions that are in, so feel free to go ahead and send me an email, steve@tfnn.com. Just put in radio show question inside that subject heading. Let's go back to the general markets out here, and because, hey, nice move that we've had today out here. Are there any potential troubles, roadblocks that you and I need to take a look at? And unfortunately, or fortunately, really both, yes, we have to take a look at some specific areas. One of those areas is going to be where the close is going to be inside the ES Mini, the NQ, the YM, the Dow, and the Russell 2000. Well, you might be looking at this chart with me and say, what do you mean, Steve-O? You got green shoots. You simply have breakouts going on because you've got price that is well above the top of those new TAS daily profile boxes out here. Inside the ES, remember the price point was $25.91. Inside the NQ, we talked about this yesterday, $63.36. Inside the Dow, $23.46. And heck, we know that it was last Friday that the Russell 2000 really gave you the signal that prices were going to run to the upside because it had already taken out the top of its box. So it's not the daily tops of the boxes that we have to pay attention to. Although we do, because the day is still not over, anything can happen. I cannot control what takes place in the next moment, or any moment for that matter. But what we can take a look at is understand the barriers that help us to identify support and resistance. Inside the daily profiles, you're well above resistance. So that says we have to go one level up. And as we take this one level up, that says we go take a look at the weekly profiles. Now, the weekly profiles, here is where the pedal meets metal or something like that, right? I got to use metaphors that I actually know. Well, it's going to be now inside the ES, the YM, and the TF out here. NQ, free to run and roam as high as it wants to. There's not anything in its way to move higher. And when I say there's not anything, I mean there's nothing, nada, zilch, zip, nothing on a weekly basis for the NQ to not continue running higher. So for those of you that believe, so as goes the NQ, so goes the market, well, then you have your answer. My belief is I want to see price take out resistance. Well, inside the ES, this is a brand new weekly box. Inside the YM, brand new weekly box. Inside the, and neither are bearish structures out here. So just simply closing above the tops of those boxes, 25.95 is what we're going to use inside the ES, and 23.557 inside of the YM. This is as of Friday. We won't be broadcasting on Friday. So this is going to be something that you want to pay. What happens if price doesn't close above these levels? Then it will just simply struggle at resistance. Does it mean sell away? No. It just means you're like Roger Bannister, who got to 4 minutes and 1 second and he didn't break the 4-minute mile just yet. Doesn't mean that it's bearish out here, but what it does mean is that just like Roger Bannister, if you do see closes above those levels, then the ES, the NQ, the YM, and what the Russell needs to close above is 1518. Yeah, 1518 is the number there. And then you will have no resistance, and the markets continue running higher for the rest of the year. Ho, 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 ho. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the next request comes from Kevin, and Kevin says, Steve-O, Kevo, What's your assessment of the SMHs, daily, weekly, monthly? Do you have a target where you would go short? So let's start by taking a look at the semiconductor indice out here, and with regard to where it's headed to. First, I thought I had this done. Maybe it was on a different chart. I'm sure it was on a different chart because I know I've done the work, but I don't mind redoing the work. Let me just say, it was on a different chart out here. But very first, with regard to where this is headed to, it's headed back to its highs from 2000. Well, wait, that's not the correct high. Let me move this rectangular box out of the way out here, and let me use some line other than yellow for you. So it's about to, or it has, made a 100% move. Let's use a color of green. I like green out here, mean and green. If we take a look at, and what that means, Kevin, is 1362.10. You're at 1336.93. Monthly basis, we're inside that swing point. It's all-time high out here. That would be 100% move. In normal markets, if you were to ask me where is a place where you could consider going short, it would be at that level if there was a failure on price and volume. Then you probably want to see it on a monthly basis and looks for some type of bearish reversal signal. But these are not ordinary times out here. Virtually everything, not everything, because the XLF is one of those other things that it's not, but virtually everything is above their all-time highs. There is not anything that I can see that would say to you and I that the semis are going to peter out at that time. That's using a Steve-O, a Kevin-O, and a Peter in this case out here. Instead, where I believe the semis are headed to is a similar move to what we had back when it made its run from the lows in 98 to the highs in 2000, which would take us into about the 1735 level. You take a look at percentages, and that's a fairly good percentage continued move to the upside. If I just take a look at the daily chart out here, and we look for any patterns that say, hey, caution, Will Robinson, well, it's not going to be the seventh wave move out here. It's not going to be the third wave move. The only thing that I would be paying attention to for some type of pullback, more likely a pullback to enter to go long, not necessarily to go short, but it depends on your time frame horizon for trading out there. If you've got quick fingers, quick triggers, and it is the mere fact that price continues to rise right now with less relative energy. Daily chart we're looking at, if you were to see a bearish reversal candle form, then we'd have to come back and take a look at levels of support out here. But we don't have that pattern on the daily. I'll just switch this chart to the weekly time frame, see what signals are out here. There's absolutely positively nothing as we take a look at a weekly chart for the semis that give us any signal that these things have made a top. So I'm going to go back and say, if you want to know where the price is, you ask the question, I'm going to give you an answer. Where it is that maybe you can go short inside the semiconductor indice. I know you use the SMHs. We're just looking at the indice. I'm going to go with 1735, and that's another 400 points from where we're at. And 400 points is, I don't know, 30% or so, something maybe more than that, 30 to 40%, somewhere along those lines. So thanks for writing in. Happy Thanksgiving to you. Same to you, Audie. Didn't make a mention of that. And same to you, Golf Guy, because Golf Guy sends in a question here, says, hi, Steve. I'm guessing your system, Stevie's red line, would work for looking at a mutual fund. Regardless, can you look at the Fidelity 2030 Retirement Fund symbol, FFFEX? So let's do this out here. See what we can try to figure out in taking a look at this, because this is really going to put me to work. It's going to put me to work if I can find the. There we go. So first, just the mere fact of having to type in so many letters, FFFEX out here, and that's going to be a Fidelity mutual fund. So I actually have to change these to line charts for these things to, well, at least on the daily I do. Let's skip the daily, because this is in your retirement account clearly, and it's the 2030 plan. So let's not worry about the daily activity and try to give you a feel for where this is headed to. As well, what did I do with that other chart? Did I delete it? Oh, no, I didn't delete it. So let me come back to this as well. FFFEX out here. So here's where you're going to see my red line on a weekly basis. But, and it's below it on a weekly basis. Does that bother me? No. Let me put this chart out here. Here on the monthly, where your level of support might. So here's what it did. 2 weeks ago, you had a nice little thumb to mark setup, 9 count out here. And that 9 count, let me get my cursor here for you. You'll see this bar here. This is the bar from 2 months ago. I take that back. We're looking at a monthly chart. Even better. Muy bueno out here. So back in September, you happen to have the 9th month of the year, you happen to have a TD setup 9 count. Now, that bar number 9 did not trade into bars 5 and 6, which typically is a good indication that momentum is not going to stop out here. So it should continue to move higher. If we were to take a look at the A to B equals CD pattern that is inside this thing, this would give us a price projection, well, 1847. You were at 1816 as of yesterday's close. I would say you're looking at 1980. I don't see anything on the longer-term charts as you and I look at them, whether it's from TAS market profiles. And my apologies, because I'm not certain how well the TAS market profiles work on the mutual fund data. I just don't know. I'm not saying it doesn't. I'm just saying I just don't know out here. But I'm not seeing anything, unless you're seeing something that would suggest anything other than this is going higher. Now, whether it is the 2030 plan that you want to be in or not, that I don't know, because I don't know what that mix is. I don't know if you're sitting there in some percentages in bonds or, or whether it's in growth or it's in value or it's a mixture of all those. So maybe there's other funds for you to consider out here. But, hey, golf guy, happy Thanksgiving to you and your family as well. But it looks pretty good, so keep on keeping on out there. All right, so let's go take a look at, I don't know, let's punch up the charts here, see what else we should look at. I suppose we should look at gold, right? We should absolutely look at gold. And what is it that we see inside of Goldilocks at the moment out here? Let's go back to this chart. I think I've got things jumbled up a little bit. There we go. Jambalaya. And so here's what we know about gold right now. If we look at a 60-minute time frame chart out here, we can see the price was able to break above a bearish profiled structured box. Now, that top of that box was 1261.10. I probably have to make these numbers larger. My eyes are getting a little bit sketchier. So as we take a look at, and if it stays above this 1281, did I say 1261? Look at 1281. There we go, 1281. Then price should really, you know what, I would take that back. It's got to be 1282 that it has to get over. If gold can get above 1282, then you're looking for run maybe the 1293 area, back up to those highs out here. So we're seeing a lot of moving and shaking, so to speak, going on out here. About the best thing that I can share for those of you that are taking a look at gold is the very simple rising trend, maybe rising trend pattern. I think we've got a green line out here. It's a red line, doesn't really matter. And this continues to make slightly higher lows out there. Not by much, by the hair on your chinny chin, but nonetheless, that's considered a possible rising price channel. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You can watch on your mobile device. I had a long trip earlier this morning, and so I was not watching as I was driving, especially going through some nasty rainstorms out there, but certainly was doing the best I could to listen to the shows this morning out here, but which is really a cool thing. You just plug it into your car and, surround sound, and it's great. Okay, so I had a request out here from Matt in Vail, Colorado. Matt, what's the temperature out in Vail? It's probably lovely out in Vail. Are you going to be skiing this Thanksgiving out there? And happy Thanksgiving too. Matt wants to take a look at light sweet crude, and nice and cold today. Perfect. It's we're sweaty hot down here in southeast Florida, which is really not so bad. That's what I signed up for. That's what you signed up for. Now, if we take a look at light sweet crude, not a lot of snow. Bummer. Well, then come down here and hang out. Bring your bathing suit, hop in the water. First, I don't know what the time frame is. We're going to take a look at a couple different charts out here. First, you're seeing the monthly chart, the continuous contract. It's the only way for me to get all of this data on this set of tools out here. And when we take a look at this set of data, remember we were talking about the TD9 count when we were looking at that mutual fund out here. Here's a TD9 count on a monthly base. Took place in March of 2016. See how that bar is traded inside of bars number 6? Really bar number 5 as well. So 5 and 6. So the cool thing about that, this is what I've identified from a pattern standpoint, it really improves your probability that the instrument you're looking at is forming a bottom. It's no guarantee, but if you take a look at that type of pattern, when it makes 9s and you don't trade with inside there, that's where you get the continued momentum. That's why I just simply shared with, I don't recall who wrote in, but why the mutual fund looks like that's going to continue to move higher. Versus, take a look at the bottoming effect. Price was moving lower, doing less relative energy inside of light sweet crude. And so right now, where light sweet crude is headed to is its resistance line. Also happens to be a Tom DeMark system level, which is right around $60. Don't quote me on the exact price. It could be $59.50. So right around that $59.50 area. If price were to close above that, and really one would say, well, why would you just go take a look at the so-called swing point from May of 2015? And I would say you're right. So 62.58. If light sweet crude can close above that, well, then it's going to continue to run higher. Now, that's looking at the continuous contract. You're probably not trading it like that, but if somebody were long light sweet crude, I would have no reason on a long-term basis to tell you to go ahead and get out. Now I'm going to put together, because the contract has rolled over, and the profiles that I have here, sometimes they're the same, sometimes they're not, if we look at the January contract out here. But these profiles, I feel, are better, better. And therefore, 55.61 is level 1 of support. That's the old top of the daily box. Real support is 54.36 out here. And as long as light sweet crude stays above that, this will continue with a bullish trend to the upside out here. We haven't seen a close below the bottom of a box since October 6th, so well over a month. So this, and even then, it turned out to be a falsified move out here. So light sweet crude on a daily basis looks like it wants to continue moving higher. Where would moving higher take us to? Well, probably takes us into the 59.60 type area. That's what the daily chart is showing us. The weekly chart, utilizing my synthetic contract, is bullish. The 60-minute chart is bullish. The 240-minute chart is bullish at the moment. Where things turn, though, would be on 60 minutes, it closed below 56.47. To 40 minutes, it closed below 55.84. And again, the daily was 54.36. Let's go to Pat. I'm thinking, Pat, are you in Denver? Do we have
Dennis, Pat? Like the boy's name, Dennis, Massachusetts.
Dennis, Massachusetts. Well, so now where is that? I'm not familiar with that. Where is, not that I'm that familiar with Massachusetts, period. But
on Cape Cod. We call it the heart of Cape Cod. It's one of the center towns in the center of the Cape.
Oh, very cool, very cool. So now, are you a native of that area?
Yes.
So tell me the best thing about Dennis.
We have relatively low taxes compared to the other towns, and we have beaches on the North Shore and the South Shore, and we have a beautiful freshwater lake, Scargo Lake, so there's all sorts of choices.
And so how are the oysters and the scallops up there?
Oh, the scallops and the oysters are the best.
Oh, perfect.
And the full-bodied clams, which you can't get other places. We eat the whole clam.
So a full-bodied clam. So how is that different? I go up to Martha's Vineyard in Nantucket usually once a year, and we do clamming and stuff like that. And I'm not a clamming expert other than from the consumption side of it. I'm very much an expert there. But what's a full-bodied clam?
Well, you eat the whole clam. Lots of times down here, they just have in Florida. If you go to Florida, lots of times in those places and other places around the country, they don't eat the belly of the clam. They just eat like the neck and fry that.
Blasphemy! You know, the belly of the clam is the best.
Oh, it is.
Oh, absolutely.
It is.
Now, my favorite clam, we'll get to the stock market here, is called giant clam that comes from Japan. And I specifically asked for the belly portion. Interestingly enough, sushi chefs that don't know anything about it cut that out and throw it out. And I'm like, how can you do that? It's the best part. If you're going to throw it out, let me call me. Let me come up there so I can eat.
Yeah. And then we have quahogs, and a lot of people pronounce that quahogs, but it's quahogs. Did I lose you? Hello? Hello, did I lose connection?
Okay. Let me try to get the den. Okay. Give me a second here.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. Hey, Pat, sorry about that technical difficulty. We've got about 2.5 minutes, so straight to it. Tell me how I can help you with regard to the cues, time frame, things like that.
Okay, I got Thinkorswim up, and I'm just starting to learn DMARC's system. I'm looking at it. And on 11/16, we went to 13, and shouldn't it have started down then? And does today negate that whole process?
So you take a look at a daily basis out here?
Yeah, daily, yeah. I got
so I don't
13 count on 11/16.
Yeah, I don't have that same 13 count on my system right now. But regardless, those numbers, then that's just step number one. Step number two on a TD sequential 13 count requires a close below the close 4 bars earlier for it to even signal. So
okay.
It's just one way of counting and to help to identify potential reversal areas, but it has to have that additional required element of closing lower. I like to use my red line as an indicator versus 4 bars earlier, and a couple of other things. Here's what the cues are doing. They are confirming on a daily basis. It appears as of 155, an A to B equals CD to the upside. It closed above 154.54, which looks likely today, with more than 17 million shares, is just simply a confirmation of an A to B equals CD to the upside. That takes price to 159, 162, 165, something along those areas. That's on the short-term basis. On a longer-term basis, or let's say the next level where the NDX 100 is headed to, is 67.87. By when, I can't give you the exact day, but or the exact week or the exact month, but 67.87 is what's in the cards. And then eventually, you and I are going to see the cues get up to the price point of 88.45. And we're at 63.78. So these things are strong, long and strong.
Okay, thanks for the explanation. I was trying to understand, and I have to read the book again. It's very complicated.
It is a really complicated book, but thanks so much for reading it and giving a call in here. Folks, stay tuned. David White's up next. After David, Tom O'Brien, 3 to 5, Andy Heck from 5 to 6. I'll see you on Wonderful Wednesday. Have a great Tuesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.